Testing, testing. Looks like we're live. So this is like the first time I basically streamed on YouTube in about 2 years. I don't know if anyone watched the last stream of mine, which was actually when the whole GameStop saga was going off, and I did a cheeky stream here or there. Probably a very poor, pathetic little stream, but it was fun. And anyone remember what happened with GameStop, where everything went crazy? You had that one rogue trader who thought he saw this undervalued stock in GameStop. His name was Streaming Kitty or something. No, Roaring Kitty, his name was. And he built all of this hype around GameStop. He said it was an undervalued stock. He thought it was an undervalued stock, and he got all of these people, putting money into GameStop. It went crazy. It blew out all of the people who were shorting, the big hedge funds who were shorting the stock. Crazy what was happening I think this was about 2 years ago. When did it all go crazy in GameStop? It was the start of January, the start of 2021, early January. So that was the last time I streamed. So it's going to be interesting doing another stream. Hopefully it's working well. It says excellent conditions, so that's great. But basically what I wanted to do in this is just go over some of the news, what's happening in the stock market, some of the major things with regards to different stocks. And then I want to do a little bit of a dive into, I just want to try find my next stock purchase. Basically, I got a bit of money floating about, just a little bit. Basically what's happened with me over the past 2 years I've spent basically all of my money on a house. And now I've paid off most of that debt. I've got about 15% left to pay off. And I'm just going to start pushing a bit more money into the stock market. Obviously, I need to know what stocks to buy. So that's kind of the whole point of the stream, just to dive deeper, build up a watch list, build up a potential stock to buy list, and then start accumulating shares. That's the whole point. But first, let's just see what's happening in the market, and then we'll get into the news of different stocks, and then we'll get into which stock to buy. S&P 500, one of the best indicators, just to see what things are looking like. So I know everyone likes to look at what's happened over the previous day. Has it gone down or up over the past day? Honestly, I don't really care too much about what's happened over a day. Has it gone 1% up, 1% lower? 1%? Who cares about 1%? It's really not that much. It's more of a trading thing. I know all the traders care about that, but guys, I'm not a trader. I'm not a stock trader. I'm an investor. So one day I'm not really worried about. So 5 days, let's look at that, up 3%. 1 month, it's basically floating about up, down a little bit. But the real thing you want to look at is sort of year to date. That's important. So the past year, it's up 14%. So we've had a good 2023. And over the past year, which the difference between year and year to date is obviously year to date is the start of year to date starts in 2023. 1 year goes back 1 year from today, which is the 12th of October. So 12th of October last year, it is up 22%. So the stock market's doing pretty well. It's actually almost close to all-time highs, which is pretty interesting since the economy's, since we've got high inflation and, people are talking about a recession, and the economy's been struggling a bit. It's interesting how the stock market is actually almost at all-time highs. It's not really what you'd expect. Let's see if anyone's actually joined. I don't really expect many people to join, if any. But let's get into stock news. No, well let's look at what's happened with overseas stocks. What's happening in China? We all know what's happening unfortunately in Israel and other places like that. I'm not going to be talking about that today. Just going to be talking purely about the markets, purely about business. What's the other one? There's the maps. Maps gives you a good feel for what's happening. So we'll do the world. Cool advert. So over the past month, Canada's been struggling a lot. Look at that, their stock market over the past month. Let's pull that back. Let's pull that back 6 months. So again, Canada's had a tough year. Does anyone know what the index for Canada is, just to see what the overall market is? I don't know it off the top of my head. China's up and down. Obviously, Alibaba, I feel like that stock's always going down. JD, that's been tough. And Japan's doing well year to date. China's a little bit everywhere. Canada's doing pretty poorly. Cayman Islands. Obviously, everyone who has their money in the Cayman Islands, probably pretty happy, I guess, overall. Now, let's take a look at some of the major news. I've just written out a bit of a list. So obviously, the most important one today is inflation, CPI, Consumer Price Index that's just come out. Like, I think it only came out about an hour ago. Do you guys know what the CPI was over the past sort of year to date? It's come out at 3.7%, and they expected it to be 3.6%, and so it's a little bit higher than what they expected. And just to give you a better feel for things, of what that actually looks like from a longer term perspective, I don't know if you remember when it was around the 8-9%, that was a tough time for a lot of people. Just basically anyone who had their savings in the bank during that time, you would have just got absolutely wrecked. And even over the next year, man, what do you guys think? Do you guys think that we'll be able to get inflation down to, I know Jerome Powell wants to get inflation down. He always says 2-3%. And like, I believe him, man. I know you got all of these stock traders who say, nah, he's never going to get it down to 2-3%. It's going to be what they call sticky inflation, where inflation is going to be higher than that, higher than 2-3%, maybe 4%, 5%. They think he won't be able to control it. But man, I trust Jerome Powell. I think he doesn't care what happens. He's going to get inflation down to 2 and 3%. That's like the core goal of the Federal Reserve. And Jerome Powell, he sticks to his word. He's done it. He said when inflation was at 8-9%, he said he was going to get it down. And a lot of people thought, how are you going to get inflation down from 8-9%? Look, he did it. He did pretty well. Yes, it's gone up a little bit, but I personally think he's gonna get inflation down. That's my perspective. I'm not pretending to be an expert or anything like that, as a lot of other YouTubers. Maybe they know more than me. Let's just say that. But I was pretty accurate. I was saying a while back that I believe Jerome Powell is going to get inflation down. I believe him. He's a man of his word. I think he is, just from what I've seen. And that's my opinion. Let's look at some of the other news. Any comments or anything? I don't think so. Oh, that's because it's private. What the fuck? He thought it was an undervalued stock, and he got all of these people, putting money in. Okay, so that was pretty funny. I was just going live, but I was like, why has no one actually joined the stream? I didn't expect many people to join the stream, but literally no one had joined it. And then I just seen that I'd put the privacy on private. So that's classic me. What a genius I am. But I was just talking about inflation. I don't want to get back into it, but basically we're talking about how a lot of people thought, how is Jerome Powell going to get inflation down from 8-9%? And they were saying, no, inflation is going to be really sticky. It's going to stay high. But my personal opinion, even though I did listen to a lot of different interviews, I even interviewed some people and they were telling me, yeah, he's going to really struggle to get it down. I always thought in my mind, and I said it, that I believe Jerome Powell, that he's going to get inflation down because he always said that was his goal, 2-3%. And I don't know, he gets a lot of hate. He gets that whole the money printer meme and everything. He's always talked about on Twitter, but I think he's a man of integrity and he's gonna do what he says. Jerome Powell, money printer. That's my opinion. Don't know what you guys think. I think he's just gonna do whatever he can. He'll affect the interest rate to make inflation go down to 2-3%. And he's always said that's his goal, so I'll believe him. We talked, by the way, now that I've made the stream public, I was talking previously about what's happened with Canada. Canada's had a tough year in the markets, and we had a look at some of the other countries. But I want to get a bit more into stock news before I dig a bit deeper into potential stocks that I want to buy. The plan is, by the way, I'm going to look at what I call guru portfolios. So what are gurus buying? And I'm not going to copy them. I'm going to just look at what the gurus are buying to get ideas. And then I'll do my own analysis and then decide, do I want to add this to my watch list? Do I want to dive deeper into it? Do I want to potentially buy the stock? So that's what I'm going to be doing today, building up a watch list and building up stocks that I potentially want to buy. Right now, the only stock in my sort of watch list that I want to buy is Google. I haven't pulled the trigger on it. I want to do a lot more research, but that's in the buy list. This is in the maybe list, and let's build up that list. This is what I look for in a stock, by the way. But I'm a value investor. I look for value. I follow Warren Buffett's method, although not exactly in buying businesses that are traditional and old school. I have my own style, but I've learned from Warren Buffett. I've learned the way that he does things, and I don't copy it word for word. I'm 28 years old. I do have my own style. So, a lot of people like to have goes at other people who say they're value investors and Warren Buffett followers, but then they buy a stock like Netflix or something, and then people have goes at you for doing that, even though the stock, had done pretty well over 10 years, done extremely well. So I'm a Warren Buffett follower, but I have my own style. And if I want to buy a stock that maybe has a higher P than normal, but I believe in the business and I believe in the management, I'm going to buy it. And even though a lot of people might hate on that. So I like to buy a business I can understand. Low PE ratio. I want to pay a low price, generally speaking. Decent growth. I'm talking about fundamentals. I don't care about the price. I don't care about what Mr. Market is determining the price for the stock, what he determines growth is. I'm talking about growth and fundamentals. I might write that down. Fundamentals. So this is growth in revenue and profit, obviously. Generally, the main two things. Low debt. I don't like companies who just rack up the debt. Obviously, we saw that with SBF and FTX, and we all know how that went. Didn't exactly work out well. But his main problem was he had all this debt to pay with Alameda Research, and then he just got customers' money to pay that debt. So it's not like everyone who has high debt will behave immoral like that, but when you do have high amounts of debt, it just increases so much risk to things, and especially when they start increasing interest rates, then you start to struggle. So low debt, man, low debt. And I like to sleep easy at night. I don't want to worry about all this debt that my company has and that interest rates might be rising and that they can't afford it and my stock might go bust and I'm going to lose all this money. No, that's not my style. Other quality investors back it up. I do like that. I've never said I'm a genius investor or anything like that. So I really do like to have someone who's buying it, or someone who likes the stock who I really, who I think is a good investor. I just like that. Good management, obviously key. If you have poor management, they can ruin a business. I like to have managers with integrity, energy, and talent, as Buffett would say. And I've really thought about those three things, and that's all you need in a person and an employee and people you're working with. Integrity just means, let's do energy first. Energy just means they're hardworking. Talent just means they've got this skill for it, and Warren Buffett, if he tried to play basketball, how would that work out? He doesn't. Even if he had a lot of energy and was hardworking and a lot of integrity, he'd never be a basketball player. Why? Because he doesn't have the talent. So you need someone who has the talent to run the business that they're in. The last one is integrity. You obviously need integrity, because if they don't have integrity, you want them dumb and lazy. You want them not talented, and you want them having no energy, because they're just going to probably do what SBF did with FTX and defraud the customers and wreck the business, or maybe not to that extreme, but you guys know what I mean. So another thing I look for is decent ROE, return on equity, and return on invested capital. What do you guys look for in a stock? Do you have anyone? 3 views, I'll take it. Thank you. Hopefully the stream's working well. I want to get a bit more into the news, what's going on. So obviously we just talked about inflation, 3.7%. Not too bad. Powell's done pretty well. It was 8 to 9%. So good work, man. Overall, good work. He's got inflation down, even though he was the one who got it up by printing all of that money. But we'll forgive him. I guess we had that whole pandemic and the whole shutdown. Literally, the whole country shut down. So we had to get money from somewhere. Warren Buffett has said that he did really well. So listen, I'm no Warren Buffett. I don't have the genius of Warren Buffett. Probably don't even have the integrity of Warren Buffett. So let's take Buffett at his word. I believe Jerome Powell's done a good job. Okay, PepsiCo. Anyone own PepsiCo stock? I thought I was logged into Twitter. PepsiCo. So it looks like PepsiCo recently have done pretty well. So that PepsiCo earnings just out. Their net revenue has been beaten estimates, 23.45 billion. Core EPS has beaten estimates, 2.25 to 2.16. PepsiCo 3Q organic revenue is increased of 8.8% compared to 8.3%. So very good quarter. Let's just take a step back though. I just want to see I know this is, one quarter is not exactly a wide viewpoint of everything. Let's take a wider snapshot of where the fundamentals actually are with PepsiCo. So who cares about price, I guess? $220 billion company. Are they bigger than Coca-Cola? Let's check. What do you guys think? PepsiCo or Coca-Cola a bit bigger? I reckon Coke's going to be bigger. 220. What? Oh, yeah. So very close. 227 is Coke in market cap. 227 billion. And PepsiCo is 217 billion. So these companies are neck and neck, man. Which one would you buy? Look at that dividend. Very nice dividend for Pepsi, 3.2%. Coke is 3.5%. But the PE ratio, so you're paying a higher premium in terms of price for PepsiCo, 26 PE compared to 21. Man, that's a high PE. I know prices are high. We just looked at the S&P 500. They're almost at all-time highs, but do you guys really want to pay a 26 PE ratio for a company that's been around for... How long has PepsiCo been around for? Jeez Louise. Founded in 1965, so it's been around for almost 60 years. 58 years. Yeah, and obviously with older companies, they mature in their growth. They're less, they're not going to get those crazy growth of a new company. How much more can PepsiCo grow? They're literally in like every, Western country, major country. So 26 PE ratio for a company that's probably not going to grow at a high rate of clips. Maybe, not for me, man, honestly. So I'm not going to be buying PepsiCo stock, but congrats to all the PepsiCo shareholders who have actually had a decent quarter. Let's look at some of the other news. China's economy. Just then, China is planning new stimulus as its economy continues to worsen. Okay. China is also planning to raise at least another 1 trillion of additional debt and raise its budget deficit cap. So I don't know why is China struggling? Anyone know? Is it the fall in population? Is it too much communism? Not enough capitalism? What does he even mean by struggling? Like, is it down in GDP? Is it down in the market? Kind of need a bit more information before you can say it's struggling. Obviously, the GDPs, this is all 2021 data. This was interesting too. So any of you Google shareholders, which I've already said early on in the stream that I do at some point want to be a Google shareholder if I get it at the right price. There's a few conditions I would like, and I want to research the stock more before I buy it. But this is important because the Canadian government came out recently and said they want Google and Facebook to pay at minimum 4% of their annual revenue to Canadian news websites in return for having links to news articles on their platforms, which is ridiculous, and Google rejected it. But just imagine 4%, like, do you know how much money that is? 4% of Google's revenue. This is Google we're talking about. the company who earns probably top 10 in terms of total revenue. You want a portion of their revenue? You crazy? You want 4%? Like, just for doing nothing, basically? Like, let's have a look at the actual numbers behind 4%. It's like a financials, income statement. So 4% of 290 billion. How's your math, guys? 4% of 290 billion is, well, 10% is 29 billion. So 4% is probably like $13 billion or something like that. So they want $13 billion. And by the way, their profit is only 60 billion. So that's like, what's that? 13, but that's like a fifth of their profit. You want a fifth of their profit for having their news links, Canadian news links? Like, that is crazy, man. So obviously Google rejected that. Let's see how that plays out. Obviously, it's a bit of a political thing going on there, but it is important for all Google stock shareholders to know that. Let's take a look at some of the other news. Chipotle. Anyone own Chipotle stock? I personally don't right now. I know Joseph Carlson likes it. I haven't watched too many of his videos, but he seems like a good, honorable YouTuber. And we're going to actually look into what he's buying soon. But he does own Chipotle stock. Chipotle has now began testing bowl and salad making robots in its stores as labor costs continue to increase rapidly. And I don't know how long away this is, but just imagine that all your food starts to get made by this robot, and then they can just cut out, all of the wages that they pay to their employees. Imagine how profitable Chipotle will start to get if they can do this. And if they invent the technology, maybe they could patent it out. Maybe, I'm not sure. But imagine like if they do that in McDonald's and KFC and all of those stocks. There's a lot more profit on the table. I know I sound like a little bit of a greedy capitalist here. Like, what about all the people losing their job? But yeah, I feel sorry for them too. What can I say? It goes both ways. It's reality, and I'm sure they can get jobs in other sectors too. And I feel bad for them too. But I have to look at this from an objective standpoint, and it may make Chipotle a lot more profitable, which affects the investment decision. Now, this is a key reason why I don't want to buy Chipotle. 44 PE ratio, man. 44 times the price of the current profit of the business. That's a lot, and it's a food company. It's not like a tech company with a crazy amount of growth. So that's why I'm just like, okay, I don't really want to. I don't want to own the stock yet. I've heard really good things about Chipotle. Never tried it, but about the business, about the taste of it, about how much customers love it, and about how big the lines are apparently in the different stores. I've heard a lot of good things. So yeah, I'm not saying don't buy it. It's up to you. But it looks like a good company. I'll say that. What else is going on in the news? Meta. So this is like basically, I could have told you this was going to happen about a year ago, maybe even 2 years ago. So Facebook, Meta, started to lay off employees in its metaverse division. So this is that division where Zuckerberg spent about $25 billion to try make this metaverse, which no one was even using yet. And it's been like 2 years and barely anyone uses it. So it looks like the $25 billion has gone, a lot of it, to waste. Although recently he came out with a Lex Friedman interview, and it actually looked pretty good. Like the interview was just done with like glasses at different points, and they could kind of like see each other properly in some way. So what do you guys think? Do you think the metaverse will take off in like 5 years time? Maybe, man. Imagine like you could talk to like your parents or your sister or whatever, and you were in different countries, but you could like see them virtually. It's crazy. Don't even. It's not really my thing. I don't like that's a bit too much for me. I don't know if I like it. Okay. Now I want to just do a bit of a dive into some potential stocks that I might buy. And the way I get stock ideas is, well, I look at investors that I Some of them I trust more than others. Some of them I like more than others. But I look through like guru portfolios, YouTuber portfolios, alternative investors. I'll ask my dad what he's buying, my brother what he's buying. I'll ask a lot of different people and what they're buying, and then I'll get that idea and see if I potentially like it. So what is Bill Gates buying? Like, this guy's a bit of a controversial character. I know a lot of people don't like him, but let's be honest, he's a pretty good investor, or at least Michael Larson is. I know Michael Larson's doing most of the investing for this trust, the Bill and Melinda Gates Foundation Trust, but Michael Larson is a value investor and he's pretty decent. So what is he buying? BRK. You guys know BRK? Sure, you probably do. Any value investors obviously do. BRK just means Berkshire Hathaway's Class B shares. Berkshire Hathaway is obviously Warren Buffett's holding company, and a holding company just means he owns a bunch of different stocks and companies. So he holds a bunch of different assets. It's like an investing company almost. And so if you own Berkshire Hathaway, you technically own a portion of all of the stocks and companies that Warren Buffett owns. It's a beautiful company. I mean, I wish Warren Buffett was, I wish that was a 6. I wish we could just turn that 9 into a 6. Man, we need Buffett in this world for a lot longer. He's such a good guy. So smart, so wise, and just so much integrity. Like where do you see people like Warren Buffett and Charlie Munger in today's world? It's so hard to find people like that. And man, I wish he was around for a lot longer. Every time he talks, it's like I want to listen. I want to listen to what he says. I love his shareholder meetings. Like, it all makes sense. And he also speaks to the regular people. He doesn't use like all of these crazy financial terms that are esoteric and hard to understand, even though I just used one just then. Esoteric. It just means, I believe it means it's like hard for the regular person to get a hold of, or something like that. But he speaks, he's a teacher at heart. That's what he said when he dies. What does he want written on his gravestone? A teacher. That's what he told people. And he'll go down as like one of the greatest teachers and greatest investors of our generation. So a beautiful way into buying, not a piece of Warren Buffett, not a piece of Warren Buffett's mind either, but in a way, a piece of his investing mind and the stocks that he chooses. So let's take a look at some of those stocks that Buffett has bought or holds over the years. He's got a beautiful portfolio. Warren Buffett, Berkshire Hathaway companies. Apple, obviously, he purchased big into Apple. I believe it was 2016, and that turned out really well. I mean, not that he tries to time stocks in any sort of way, but he ended up timing this purchase perfectly, and that's just because it was undervalued at the time. Let's look at Apple stock. He bought it in, I believe he started buying in like 2016. Yeah, at just $25 a share, and it's gone up 538% since then. I actually saw recently that he's been buying more Apple, which is interesting to say in the least. I don't know if it was him or if it was one of his investing partners who also invests for Berkshire Hathaway, Ted Combs and Todd Wilshire or something. Ted and Todd are their names. So sometimes you don't know if it was Buffett who actually bought the stock or if it was Ted or Todd. But he is buying more Apple stock. Let me just take a look just to confirm that. Here we go. So, by the way, this site is Datarama, where you can see the stocks that Warren Buffett holds and the stocks that he's buying and selling recently. Beautiful site. Well, a site I use all the time. As you can see, he did. First quarter of 2023, he bought Apple. He bought 1% of the portfolio, which is a lot because 1% sounds like a little bit, but when you think about as per the cash that he holds, it's probably a significant portion. So he bought 20 million shares. He added 2.28%, and it was a 1% change in the portfolio. So if any of you do decide to buy Berkshire Hathaway stock, you own all of these beautiful companies. So these are his wholly owned companies like Duracell, Geico, See's Candy. A lot of these are just sort of classic, old school, just traditional Buffett type companies. So he owns them outright completely. And then these ones, he just owns a stake in them, a piece of them, a big share normally, or normally it's under 10%, but it still means it's a big share. Coca-Cola, beautiful business. Apple, beautiful business. I think he sold those airlines. This image is obviously a little bit old. I think he sold a lot of his banking stocks, but yeah, a lot of beautiful companies that he owns. So if you own Berkshire Hathaway stock, then you technically own a portion of all these beautiful businesses. What is Berkshire Hathaway stock looking like now? Let's just take a look. Honestly, like it can be a good share to start with, just building up a portfolio over time. I'll look at BRKB because I can't quite afford $526,000 to buy a stock. BRKB, so that just means you don't have the voting rights, which I don't really need. Warren Buffett, you do my voting for me. I'm happy you make my decisions. Please, I'd like that anyway. So BRKB. So let's take a look at Yahoo Finance. Just take a look at some of the earnings, some of the revenue. Must be happening there. So they've had a tough quarter in 2022. There must be a reason for that. Just in terms of earnings, there'll be some weird accounting rule where they had, or some, one-off type thing where they had to sell something. So that earnings is a one-off. This is more like the earnings that you can expect in the future. Probably 80 odd billion, 40 billion, 80 billion, so something around there going forward in the future. So let's just say 70 billion. It's a market cap of 700 billion. So that's still that's an 11 PE ratio, a 10 PE ratio. This is Yahoo Finance. They just give you notifications like every hour. So annoying. Berkshire Hathaway, not a bad stock to buy to start with. Honestly, let's add it to the potential to buy list. Berkshire Hathaway. And actually a good way of doing this is just through Yahoo Finance. You just go on the portfolio section. My portfolio. Stocks I want to buy. And I'll add in BRKB. These are just ones to buy. I'm going to do a lot more research before I do any type of buying yet. But I just want to build up a list. Berkshire. That's the one. But it's always a good stock just to dip your feet in, just to get in the game a little bit. It's never going to be this. I was going to say it's never going to be the stock that will crash by a lot, but any stock can crash by a lot in the stock market. Even Charlie Munger said Berkshire Hathaway over the years has crashed by 50% 3 times, I believe, or more, 3 times. So he said any investor needs to just have the emotional capability to deal with a stock drop. And yeah, man, the stock market's crazy. You get these crazy bull markets where everyone's greedy and everyone's talking about the stocks, and Jim, who's never said an interesting word in his life, never said a smart word in his life, is now talking about stocks. That's when okay, probably don't buy stocks. But also there's those periods where no one wants to own stocks and everyone's just holding cash, and inflation's obviously often struggling, and the stock market's down big. That's when you want to buy, when things are cheap. So bit of Warren Buffett philosophy. Let's get into so Bill Gates likes Berkshire Hathaway. He's buying more Berkshire Hathaway stock. And I've added it to my watch list. What was the other stock that Bill Gates was buying? Let's go back to his portfolio. Bill Gates, my man. Oh yeah, Anheuser-Busch. Again, because I was telling you guys earlier, what I look for in a stock is one that I can understand. Anheuser-Busch is a company that is understandable. You don't have to be a genius to understand it. It's a beverage company, and a lot of it is alcohol, right? I was looking at it a bit earlier on. It's a tough one to spell, I'll tell you that. Anheuser. So yeah, this is what owns it. AB InBev owns Anheuser-Busch. So that's the stock. Yeah, InBev. So that's the stock. And it's a multinational drink and brewing company based in Belgium. So that's where you get that weird name, and is the largest brewer in the world. What are the brands that they do? They have Budweiser. Obviously, they had that controversy recently, and some of these other alcohol companies. So come on, it's not that hard to understand. Food and beverages are generally stocks that most people can get their heads around. Now this industry is becoming very interesting because you're getting new people finally starting to enter this industry. Like, you're getting these creators who want to get a piece of the pie. You're getting Mr. Beast with Feastables who wants to get a piece of the pie in the chocolate industry, and the candy industry, and the sweet industry. You're getting Logan Paul who wants to get a piece of the pie in the drink industry, like where Powerade and Gatorade is. He's coming there with Prime, and then you've got the Nelk boys who want to try disrupt this industry and get a piece of the pie of the alcohol industry. So again, they're not massive yet, especially like the Nelk boys. I'm sure Anheuser-Busch aren't trembling in their seats yet, but just something to take note of. Let's take a look at the fundamentals of AB InBev. AB InBev, right? InBev stock. $93 billion company. PE ratio of 17.9. Dividend, so they pay a bit of a dividend. What's happened to the price of the year? Doesn't really matter, price. Let's take a look at what the fundamentals have done over the past year. What's the ticker symbol? AB. Ticker is BUD. Let's take a look at what fundamentals have been doing for AB InBev stock. Which one is it? Okay, it's not really coming up on Ticker. Tickers, by the way, is a site I like to go to when I want data that I can be certain of. They seem to be the gold standard of data and just delivering data that you can trust. But unfortunately, I can't find the company I'm looking for, so it's going to have to be Yahoo Finance. Yahoo Finance, do you have this? Yes, they do. See what revenue earnings have been up to with AB InBev. So Gates obviously likes the company still. It does only go back 4 years. 5 billion, 4 billion in earnings, 1.4 billion, 9 billion. They're so volatile, eh? Crazy. One year you earn 9 billion, then you earn 1 billion. It's very hard to predict exactly what's going to happen. The revenue is somewhat stable, eh? 50 billion. Let's just say they continue to make around 5 billion in the future. That means you're paying a PE of about 20. How much growth are they going to get over the next few years? I don't think it's going to be massive. So they're probably going to be a pretty stable sort of company with a pretty okay business that's doesn't seem to have major competition. Just some of those new incomers that I talked about earlier on. So nah, it's just, if it was a PE ratio of 10, then I'd want to buy it. But 20 PE ratio, I'm going to say nah. I'm not going to follow Gates on that one. Another interesting guy we're going to look at is Joseph Carlson. What's Joseph Carlson been buying lately? He made a video where he went over 3 stocks that he wants to buy. Let's take a look at them.
Pull out is the risk of ruin. But we
Ray
don't
Dalio, what a
realize
legend.
pain is a great teacher.
Welcome back, everyone.
So, obviously we don't really want to go into politics. So, the first stock is...
To this, I'm not changing my strategy at all. And I'm not looking for ways to make investments that profit off of the conflict. That's not something that I'm going to be doing. The type of companies in my portfolio. I recently spent around half of my cash balance, around $8,000, on 3 different companies. So let's first look at company number 1 that I recently purchased. That was Intuit. I purchased $5,000 more of Intuit. I believe Intuit's a high quality tech company that's deeply underappreciated by most retail investors.
Hopefully he doesn't copyright me. Obviously, this is comes within the copyright laws because I'm making my own commentary on it. But full respect to the man. So Intuit, what did he say? He believes it's a high quality tech company. Selling for $529 a share. Intuit stock. Let's have a look. 65 PE, high PE, $150 billion company. It's a bit of a. It's not really my type of company. How do I get? So it specializes in financial software. This company is headquartered in California. Products include the tax preparation, so they help with tax somehow. TurboTax, personal finance app Mint. I've heard of Mint before. MailChimp. I know MailChimp. So that helps people to automate sending mail to people on their mail list. Yeah, you see, it's a bit of a hard business to get your head around. All of these software businesses, and as I said, what was the first thing I looked for in a stock was one I can understand. So this is a tougher one. So I'm gonna skip it. Not gonna look into this one. Chipotle. We actually went over Chipotle earlier on. Great business, man, but it's a little bit expensive right now for me, for Tristan. So again, skip. And then Canadian Pacific. Canadian Pacific. What is that? Is that Canadian Pacific Railway or? Yeah, it's that's what I thought. It's a railroad business. Still, Gates owns this one too, actually, in his portfolio. Is a Class I railroad in North America that resulted from the merger of Canadian Pacific Railway. Oh yeah. It is first and currently the only single line railway connecting Canada, Mexico, and the United States, operating 32,000 k's of rail across 3 countries. So these are the types of businesses that I love because it has what Warren Buffett would call a moat. Like, who's going to come in and build a new railway? No one's going to come in and compete against them because the railway's already there. They don't need 2 railways. And yeah, who's going to have all the billions of dollars to build that when there's just no opportunity there to compete? So that's what you call a beautiful moat. So these are the type of businesses I like to own. Now you're starting to talk Joseph Carlson. And as I said, how much does Gates have of this in his portfolio? I've seen it before and across the super investors portfolio. Where's Bill Gates? Where's my mate Gates? There you go, Bill and Melinda Gates. See, this is his 3rd largest stock. It's the same stock, as Carlson. Canadian Pacific. Gates is CNI, so it's a different. It is a different company, I believe, because Canadian Pacific stock, that is ticker symbol CP. Gates is typical CNI, so they're obviously just a different stock there.
Been basically flat or down, and Canadian Pacific is no exception. This company traded further down over the past month. And this can be a case where if you're not careful, the price of a company can drive your sentiment. We could look at Canadian Pacific's stock price, see that it's down 3% this year, and determine...
Don't worry about stocks, let's talk about fundamentals,
that they're one of them. With the acquisition of Kansas City...
Revenue going well, pretty well. And he talked about the acquisition of Kansas City, so... When did they do that?
The Southern, it only increases their chances of outperformance. It gives them a bigger competitive advantage.
Geez, net income doing really well.
They now have routes that go all the way from Mexico.
What is a PE on this stock, What was it? Ticker symbol CP. I don't have a PE. So they're not generating positive earnings right now? Maybe it might be one of those one-off years where they're not making positive. Let's see if I can find this on Ticker. As I say, Ticker is like the go-to place I like to look for, you know, stock information that I can trust. CP, Canadian Pacific. Yeah, for whatever reason, it doesn't want to load. It does look like they are making positive earnings though. At least that's what Yahoo Finance says. So this one says the PE ratio is 20. So it looks like they're growing well. Business I can understand. Decent PE. Yeah, this one's gonna go on the list of stocks I'm gonna look into that I may potentially buy in the future that I have caught my eye. I should actually call that the list. Stocks that have caught my eye. I'll add that to the list. CP, Canadian Pacific. What do you guys think is the best software for stocks? Stocks I want to buy. CP. I think that was most of what was on the agenda. I had a little bit of Cathie Wood. You guys want to talk about Cathie Wood, or should we just leave it? I mean,
My phone?
Cathie Wood, man. She's had a rough year, rough 2 years, eh? Really. That's what happens when you skip fundamentals and you start talking about how much you're gonna grow by, and you start talking about all of this crazy tech stock that you're gonna buy, and you think you're like the next, female Warren Buffett.
Our portfolios will more than triple over the next 5 years. So that's more than a 25% compound annual rate of return over the next 5 years. Actually, it's approaching 30 after today.
Consider the source. It's our research. Our research, I think, is the best in the business, but we're expecting a 50% compound annual rate of return.
Our expectation is that we will deliver a 15% compound annual rate of return over the next 5 years. Why did that not happen over the last 5 years?
I'll tell you why. Because you can't have your cake and eat it too. In this episode, I'm going to break down the massive bombshell that Cathie Wood just dropped.
Yeah, that's crazy how she can just go 15%, 50%. Like who are you talking to, man? You're talking to investors who are putting their savings in your fund, and you're telling them 50%, then you're telling them 15%. Good on this guy. I don't know his name, but good on this guy for actually going through and finding out exactly what she said at the different times, just to make it crystal clear how quickly things change for her expectations. But she's telling ordinary people 25% return we can expect, 50% return. Then what was it? The last one, minus 15%. It's crazy how quickly her sentiment changed. Let's have a look. What was her fund? ARK Invest. Oh, it's ARKK. Let's take a look at how ARKK is doing. So that's when everyone was talking about her, when it was like that. And she's the female Warren Buffett. She's a genius. She just picks the next best tech stock that's going to 10x. And then, the markets fall and the economy struggles. And what stocks get hurt the worst when the economy struggles and interest rates get raised? It's the tech stocks. It's those high growth, high expectation stocks that don't offer the same security as those value stocks. And then boom, minus 75%. And minus 70, I don't think people realize how big minus 75% is for a portfolio. Because if you have $100, then that means if you put $100,000 in to her fund at this point, now you're left with $25,000. How much do you need to gain further to get back up to 100%? 200, you need now to get a 200, 300% return just to go back to what you were. So that's why Warren says, rule 1, do not lose money. Do not lose money. Rule 2, don't forget rule number 1, because when you do lose money, it's so hard to get that money back. So let's see how Cathie goes. She's not exactly someone that I consider a guru. Maybe I still listen to her. I'll take a look at some stock she's buying or what she's saying in the market, but I don't consider her the arc of all investing wisdom. Let's say that. So that's what's happening with Cathie Wood. Netflix. What the heck is this? Sorry, I don't have premium on this YouTube, so you're going to have to deal with some poor ads. This is Bill Ackman. He used to own Netflix stock, and now he's gone off it. Well, he went off it about a year ago, but let's see why.
Bill Ackman speaking to Scott Wapner just moments ago about getting out of Netflix. Scott joins us on the phone. What changed since January, you think, Scott? I guess, I don't know. What changed? I haven't found anything on Netflix in a while and was worried about the content and also the quality of some of the offerings.
I think, Joe, what changed is the trajectory of the business. And it was clear to me in listening to Bill and the conversation that we had that he was as surprised by the results as anybody else. As he told me, the reason why he exited his position after only 3 months at a $400 million loss was, quote, I'm 100% ready
Did he lose $400 million on Netflix?
to admit when I'm wrong and 100% ready to admit when I'm wrong quickly.
Good on the man. He didn't just, hold on to it and, hold on to a stock that he didn't believe in. He was willing to take a loss. So that's a mark of generally a decent
So
investor.
that sort of gives you an idea of where his thinking was. He said this might work with someone with a portfolio with smaller positions, but when you have 8 or 9 investments that are large, it's hard to have bets where the dispersion of outcomes can be so wide. And I think that sort of reflects the...
Fair enough, man. So he doesn't like to diversify a lot. He only likes to have like 5, 8, 10 stocks. He likes to have a small portfolio. And when you have a small portfolio, you just have to buy those stocks that you really, really believe in. And then, so basically he thinks Netflix is not one of those stocks that he really, really believes is going to do well. And look, I've listened to some interviews on it, and he said he thinks that Netflix potentially is going to do well. He thinks it's probably going to do well for a lot of investors, but it's just not one of those stocks that he's like, 100% set on. So yeah, he's decided to sell. And I mean, Netflix does seem to have lost a decent amount of its competitive advantage. A lot of people are kind of, from what I've seen, people are getting off Netflix. The content, has seemed to drop a bit. They're not putting in those high effort shows. And the last show I watched on Netflix was just weird. Like, it was one of these magic shows that my friend said, oh yeah, let's just watch this. And then there was no thought into it. There was no, rationality behind the magic world, and just none of it made sense. So I just stopped watching like after one episode. So that's my experience with Netflix. I'm not going to buy it. But it does seem that people's experience with Netflix is shaky. Let's just say shaky. Let's take a look at Netflix user growth. Sometimes it's hard to know like which website's the best. Statista is pretty good, eh? So user is still growing, but it's maturing. It does seem to be maturing. It's not growing like the way it was from like 2017 to 2020, like just shooting up. Their growth does seem to be somewhat maturing. And we know how all of these work. Like often like these companies will mature in growth, but when things start to go down, they can fall quickly. When you lose your edge, you can fall quickly. But I'm not necessarily saying that's going to happen. But is this the type of business that I want to own for the next 10 years? Do I really think they're going to deliver high quality content? I know some YouTubers love Netflix. I'm not trying to generate any beef, but it's just not my type of company. So that won't be getting added to the list. Anyway, I'm pretty happy with where I finished today. Added a few stocks to the potential watch list. And yeah,